With the scenario analysis screen, one question we get with some frequency is, why this screen? What does a financial advisor do in a screen like scenario analysis? When is a financial advisor creating projections, tax projections? We've come up with 5 categories of answers to that question. And so I'm going to go through each of those in this video. The first reason you might be using the scenario analysis screen is just for a tax expense estimate. If you're doing any sort of cash flow planning with your client, well, the tax bill is frequently, unless you're buying a house or something like that, one of the biggest expenses of the entire year, if not the biggest expense. And so just estimating what the tax bill will be for this coming year will be a helpful input into the overall cash flow planning. So that's just an easy first thing, tactical thing that people do with the scenario analysis screen. And when you do that, what you're doing is you're basically trying to model to the best of your abilities, what is the income going to look like this year? And you can do that by starting with last year's income, copying it forward, and then making any adjustments that you think are relevant for this year. And then you'll get to a tax estimate for the year. Number 2, and this is still a pretty tactical use for scenario analysis, is still a tax estimate, but here we're trying to figure out the impact of some external event that's happening. So your client has incentive stock options, or your client is starting or closing a business, or has a change or a marked change in wages or something like that. And you're trying to just, instead of just saying, let's plan for cash flow, it's more like this external event is happening. Let's figure out what the impact, what the change will be so the client's ready for that. Very similar to the first one, but here we're not just copying forward last year, we're copying forward last year and maybe adding in some new nuances to how the client's income picture looks for the year. The third use is more strategic now. We're looking at how to fine-tune withdrawals. So a client who is pulling from the portfolio has a number of sources they can pull from, just normal taxable money, maybe realize some capital gains or losses, maybe pulling from a retirement account. And so each of those has their own tax implications, their own flavors of what's going to happen to the overall tax bill. And so you as the advisor, if you're charged with optimizing for the client, you're in part going to be looking at tax as a piece of that. And so creating a scenario and kind of turning those dials of those 3 areas allows you to optimize for your client in terms of taxes when they're pulling from the portfolio. Item 3A, I'll call it 3A rather than its own item, it's kind of related to the last one, is if you have a client who is pulling significant amounts out of retirement, you can actually use the scenario analysis screen to determine how much to withhold on those withdrawals. And in some cases, I certainly had this in my old firm, we actually were determining for the whole year how much the estimated tax should be, and the entirety of their estimated taxes we covered through withholding. Now that was important to do a projection before doing that. We had to estimate how much to withhold at the end of the year because we didn't want to have a situation where we were withholding too much or too little. We'd have to look at penalty proofing decisions. So that was a really good example of year after year, our clients who were in that distribution phase, required minimum distributions, we were doing a lot of tax scenario planning to try to figure out what to withhold in that case. Number 4, now we're getting more strategic, even more so. We're demonstrating some recommendation we've given to the client. So for example, if you say to the client, I recommend next year we contribute to an HSA account. And to us, that's pretty obvious. We know that's an above the line deduction, but the client may want to see hard numbers around what the benefit of that is. So in that case, in the scenario analysis screen, you could create 2 side-by-side scenarios. One is next year's tax bill if you don't do an HSA contribution, and the other is everything else being the same, what does it look like with the HSA contribution? And that's a good way to demonstrate for the client in hard numbers that they understand, here's the benefit of this recommendation I've made. Same thing goes for grouping deductions, for example, into alternating years. There you Your scenario might have to cover multiple years, the year that you're itemizing plus the year you're taking the standard. So there again, you're demonstrating the value of putting numbers behind a recommendation you're making for the client. Number 5, the last one, is very strategic. That's where we're using the scenario analysis screen, not just to demonstrate the value of a recommendation, but to actually come up with the recommendation itself. And so a good example is Roth conversions. A lot of people use Holistiplan to determine Roth conversion amounts. So it's one thing to say, I recommend you, the client, do a Roth conversion, but then the next question is, okay, how much? And that's where you need tools to be able to determine how much can I do before I knock myself into a new bracket, or how much can I do before I hit a gotcha, like impacting my Social Security taxation. And so that's where we're using the scenario analysis screen, not just to demonstrate the impact of a recommendation, but actually to derive the optimal recommendation based on what the tool is able to tell us about, if I move this input, what is the output in terms of tax? If I move this input a little more, what is the output in terms of tax? And so that's really the final big reason you use scenario analysis, once you've done all those other things, is not just reporting out, but deriving, creating valuable recommendations for your client. Those are 5 great reasons to be using or looking at the scenario analysis screen. We hope that you find a way to incorporate it into your practice, and it allows you to serve your clients, deliver richer financial planning advice to more clients. That's what we hope you do in scenario analysis.